Hello and welcome to the Hash for Tuesday, May 4th. It's me, Zack Seward. We got Jen Sanasie, we got Will Foxley, we got Ben Powers, we got Naomi Brockwell, and we're going to start it off with Jen today. Jen, I think we're talking about Doge. What do you got going?
We sure are. So Doge hit an all-time high today after listing on eTORO and GEMINI. And so far, Doge is up 11,000% year to date. So I don't know if this is a coincidence, but Robinhood tweeted that they are down this morning. The Oakland A's are selling tickets for Doge. I know I reached my Canada quota, but they are playing the Toronto Blue Jays. So I just wanted to get that in there. What do you guys make of this news? I know I always ask, like, are we ever going to take this seriously? And I think everyone on this panel will say no, but do you just have Doge fatigue now?
I had it quite a while ago.
You know what? I'm warming to it. I'm warming to the Doge.
Yeah,
like it's not.
Yes.
It doesn't lie to itself, right? Like Doge is a joke, and that's fine. And it may be just as much of a joke as any other crypto coin or any other stock on the market, but it doesn't lie to itself. It's not trying to delude us into thinking that it's anything more than just a coin that retains value and can be kind of used sometimes. So you know what? I kind of am warming to that perspective on Doge. That's what I got. That's what I got today. That's my new line.
I feel like maybe the coin itself isn't, but I think that TikTok Doge boosters are. I think we're starting to see a lot of financial advice be spun out of this run. And by saying that, I mean straight up pseudo financial advice. Like saying this is slightly better than a lottery ticket is not financial advice, and an indicator that it is not necessarily a good store of value or for transacting or for anything else. And so, I mean, at this point, I was thinking about what to say about Doge this morning. It's I just really don't think there's anything coherent to say about Doge. I don't think it's based on any actual market mechanism. I think it's based on wild speculation and swings in its value. And yeah, it can be fun and people can use it, but at the end of the day, I don't think it responds to normal environments. But Zach, toss it back to you.
Naomi, I just wanted to, ask Ben quickly, what makes that different than other coins on the market? What is the presumption that there are other mechanisms at play that are quote unquote serious that make these things better? So I guess that would be my rejoinder to you. But I think Naomi wants to jump in.
Mm-hmm. Yeah, no, that's exactly the point I was going to make. This is a great lesson to all of us that value is indeed subjective, and we should never be talking about value as this intrinsic thing, because at the end of the day, there's no such thing as intrinsic value, right? And so this is kind of a lesson to us all. You can look at the fundamentals of Doge, you can look at the fact that they haven't really had active developers for years and years, and you can look at the fact that there's an infinite supply and say, well, as far as I'm concerned, it's not valuable. And the market is saying, actually, I find this very valuable and I'm going to buy into it anyway. I wonder, I have two main concerns with Doge. One of them, obviously, is infinite supply, and that's never going to change. But it is interesting that there's so much hype around Doge right now, because it could solve the other issue, which was the active development. Maybe because everyone is getting into this and it's so hot, maybe they will start to, work on the code, get some cutting edge tech in there, add some privacy features. There are lots of things that could happen that might make me warm more to Doge. Currently, I'm not a Doge hodler. I'm really sorry, Doge people. I love you guys. You're fun. You're embracing life and full of joy. And I respect that. I think that's awesome. Doge isn't for me, though I'm really sorry. But I respect that other people are going to choose their own coins.
Naomi, I love how apologetic you were right there.
I just love them, I love it. I have so many friends who are into this, and I respect their decision to put their money where they want. It's just not financial advice that I'm going to be giving to anyone. Never give financial advice anyway. But it's just not something I would encourage my viewers to get into necessarily, because of the infinite supply issue and the lack of cutting edge tech in there. But, I love the ethos. I love the joke. I love the joy that this is spreading. And I love that, as I said, it's teaching people about subjective value, which is super important when it comes to understanding money.
Yeah, just to jump in on that infinite supply narrative, Dogecoin miners made 78 million in revenue last month alone, which is 70 times the same amount they made over the previous 4 years combined, which is a pretty staggering number when you think about Doge is just it's a joke. And that is money up there with some big companies. That's how much you're just printing infinitely, and people are buying it, and they won't stop buying it. Like Doge over 50
Sounds like the US dollar, right? Printing it infinitely, and it's a joke, and people still seem to think it has value. I don't understand that either, and I'm not going to encourage you to hold US dollars either. Just my opinion.
Does it concern anyone? Oh, sorry, Ben, go ahead.
No, you take it. I'll jump in after.
Okay. I was going to say, does it concern anyone that 65% of Doge is being held in 98 wallets? Like, this is something we haven't spoken about on the show before. Is this something that people should be concerned about, or does it not matter?
I don't know if you could really dump on this market that cleanly. I think if someone started offloading one of these wallets, the market would definitely crash very quickly. But I don't think those wallets are going to be, they're not going to get a lot of profit. It's a lot of paper profit. But that being said, that is a good point you're bringing up, Jen. Like, if one of these wallets did activate and start dumping tokens on the market, it would go downhill very quickly, because I imagine that this market's pretty loosely traded. Like, there's not a lot of liquidity in it, even though the price is going up a lot. So you kind of see that in Bitcoin. Bitcoin's taken years to get to the point where it has liquidity, able to buy $1.5 billion worth and then sell for 10% of that stash, and the market doesn't crash tremendous amounts. I mean, it definitely crashed a little bit, had like a little bump, but here you would see probably go back down to like the low single cents.
And I think maybe, Zach, circling back to what the question you kind of rejoined or and asked me previously, I think what maybe part of my frustration, I guess, with the Doge price continuing to go up is it's not encouraging like building out of tech around it, or other sort of like dApps like Ethereum, or like, sort of like a scaling structure for like Bitcoin or something like that. It really is just kind of like running on its own, doing its one thing, which is basically just trading. And I am concerned and frustrated too by the fact that, places like Robinhood, places like eToro, they're like putting Doge on par with like some of these foundational coins in a way that like lets people buy into it and gives it more legitimacy seemingly. And I think that's setting somewhat of a dangerous precedent. It's like the gatekeepers are enabling the people that understand the least about crypto to get some of the most volatile assets. And so that's a tricky one that I'm trying to wrap my head around.
For sure. Let's track here. Some exciting news when it comes to potential ETF on the horizon. We'll have to see what happens there. But the S&P Dow Jones Indices launched its first 3 cryptocurrency indexes, which is pretty exciting. So carry the ticker SP BTC, SP ETH, and SP CMC. So one of those is for Bitcoin, one of them is for Ether, and one of them is called a mega cap. It's a combo of the two, Bitcoin and ETHEREUM. So, I mean, this is pretty exciting. We've already seen 2 other indexes get launched, one from Bloomberg and another from Galaxy. And so, I mean, it's a really interesting phenomenon that we have all these indexes in the United States and we still don't have an ETF that can trade any of them. SEC. So maybe we could get moving on that. That would be really great. But it definitely, I smell the ETF on the horizon. Like, it's definitely there. These indexes are a precursor to that ETF, which is going to trade on one of these indexes. But I found it particularly interesting how they're doing the valuation here. So, Zach, I'm going to throw this to you because they're not doing a conventional, show it in US dollars thing.
Yeah, I felt like a real dummy yesterday trying to edit this piece with Danny. So this was first reported by CoinDesk, which was great. We sort of scooped the embargo cycle on this one just by virtue of looking and searching public documents on this. But then we were looking at these indices and we were like, why are they so small? Why are the numbers so small? Like, the number with Ethereum was like 24,000 when we were looking at it, and like the number with Bitcoin was like 7,000. And we're like, what? So we had to like ask S&P what it meant, and it's sort of like, it measures the relative growth, not like the absolute growth of these assets, right? So there's, similar to how like the S&P 500 works, that's denominated not in dollar terms, but in number terms, which makes sense for like a basket of assets. But the thing I was confused by was like for these single asset indices, like how that works. So that's really the extent of my knowledge on it, Naomi. And it was a learning by doing experience yesterday as we were trying to get this story out the door.
For sure. So I actually chatted last week with Roger Brown, who works for Luca, which is the company that's providing the API for this index. So essentially, their software is what the S&P indexes are based on. They ingest their data via their API and they publish the indexes. And there's like more interesting things being planned, apparently. CoinDesk might want to look into that. I'm not sure what they are. And I don't think anything's been announced there. So, but what's most interesting to me about all of this is everyone talks about Bitcoin, Ethereum, and says, well, it's all denominated in US dollars and it's never going to be a real thing as long as we do that. And this is a big departure from that. This is actually moving away from denominating this in US dollars, which is kind of an interesting turning point. But Will, I saw your hand go up.
Yeah, so I wanted to go back to your comment at the top of the show, which was that these indices could be used for an ETF. So can you walk us through what is your thinking for why that could be the case?
Right. So whenever you have these data points put out, they're not necessarily being traded on by anything. You know, S&P isn't holding any assets right now. They're just putting out this data as an informational thing, the same way that, you know, Wall Street Journal can put Dow Jones on their front page and let people know how the market is doing. So the idea is that they're putting out this information for people, and then you're going to have like mutual funds or, you know, managed funds, all of these places saying, okay, well, we're going to start offering ETFs that trade on this index. And the idea is to have these passive funds, which are better than managed funds. Managed funds generally have like, passively managed funds, I should make the distinction. So when you have a managed fund, they generally charge you a whole lot of money, and it's the company itself saying, well, we're going to pick and choose stocks and we're going to do what's in your best interest. And it never ends up being in your best interest, right? So when you have a passively managed fund, they generally say, well, we're going to charge you minimal fees. It's a lot cheaper to trade these things. And we're going to take that data from one of these famous, well-known indexes like the S&P index or the Dow Jones or whatever. But we're basically going to do minimal work, and all of that, you know, data management is being outsourced to what these indexes are putting out. So now we have the S&P, which is like a financial data, like mega entity that everyone looks to because of the S&P 500, right? And so now they're coming out with the crypto index, and it could be a very popular way, if ETF started getting approved, for people to offer crypto exchange, crypto index funds for people to trade on. So it's a pretty exciting step that S&P's getting involved.
Yeah, I think I'm super curious to see what this mega cap one looks like, just in terms of combining these things and looking at the sort of value and numbers going on there. It'll be interesting if you start looking at, or they start looking at sort of percent changes around like various cryptos as a class unto themselves, as opposed to just a single one, as is so often the case like at this point in time. So I'm going to be curious to see how that one develops further.
Yeah, the mega cap one. We were excited by the mega cap one, and then we're like, wait a minute, there's only two cryptocurrencies in this mega cap basket. That's no fun. But yeah, I mean,
mini cap.
I think this is indeed just, you know, a building block for future financial products around these assets, and it's gonna be really interesting to see how they get ingested into the system. All right, we're gonna take a break. Stick with us. It's The Hash. When we come back, we're gonna talk about Trump's Facebook fate coming soon to a court near you. Should be fun. Stick with us in a bit, and we'll talk about some stuff.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
All right. Well, while Consensus is up and coming, we are here with The Hash today. But I want to focus on a decision that's coming down the pipe at 9 a.m. tomorrow. The Facebook Oversight Board, which is a group of academics, lawyers, and journalists who have been brought in and funded to the tune of $130 million by Facebook, will be making a decision about whether to reinstate Trump's Facebook account, which has been suspended since January, almost immediately after the Capitol riots that saw his supporters in some ways storm the U.S. Capitol. So this is really interesting because it's going to be the highest profile decision that's been made thus far. And the Facebook Oversight Board is supposed to be completely independent from Facebook and have final say on these matters. Whether that's going to be the case is going to be put to the test. But this kind of walks out a whole set of issues that we think about in terms of centralized versus decentralization versus censorship versus like what's in the public interest and a variety of other things. But Will, I want to toss this down to you for any thoughts you might have with this coming up. What do you think is going to be maybe a takeaway that we see tomorrow? Which way the case goes?
I gotta stop nodding. You always call me when I do that.
The telltale sign.
Yeah. Yeah, no, for sure. I mean, on the front part, I don't really have an opinion either way, which way it should go. I just think it's interesting that you have this very centralized entity, Facebook, making a decision on one user's account, and it's quite final, which is very different from how the internet started. The internet started as a peer-to-peer protocol. You boot up your own computer in your home, you connect to other computers. And then slowly over the evolution of 15, 20, 25 years, we saw this hierarchy kind of be created by, the supercomputer on top, the Googles of the world on Facebooks, and it kind of trickles down to like your average user who doesn't have much control. And part of that is good because people don't have all the technical knowledge in the world and they don't have the ability to spin up their own Google and they just want to use those resources. But then we see the flip side where it's bad, where you can just be blocked and not allowed to interact with other parts of the world. I think we see this in crypto quite easily. If you're trying to trade for a ton of assets, I'd probably venture to say upwards of 80% of assets US citizens just can't touch because of the way that the regulations are set up and the fact that the internet itself is gatekept by those regulations. So on the surface, it might seem like this is just a battle for Capitol Hill, and this is between Trump and Facebook. But there is like a much greater narrative that you're talking about, Ben, there about centralization versus decentralization and what the future of the internet looks like with the development of Web3. I'll toss it down to Naomi.
Yeah, Ben, this isn't a government action, right? This is just an independent board that Facebook put together, right?
This is sort of like the Supreme Court of Facebook is how it's been pitched in some ways.
I mean,
Facebook
I think that's great. I think that, it would have been a scary situation if you had the government come in and say, we're going to dictate whether or not you have to put our political leaders on your platforms. That would have been devastating. What are they going to mandate next? That they have certain algorithms that rank up politicians, that we have like a dear leader, pulpit for our politicians and make sure that they get heard. Like, this is nothing like that. I think it's good that Facebook, it's good that Facebook is like making this decision as they should about their own platform. I also just wonder why anyone cares. Like, has Trump ever used Facebook? Like, I haven't seen him on there, right? I don't know. I guess I haven't been paying attention
because we're too much on crypto Twitter in some ways. But he usually cross-posted to Twitter and Facebook, and particularly for parts of his base, they largely lived on Facebook. Facebook's been a huge organizing tool, and I think that kind of comes back to some thoughts I had about a more fundamental part of this decision. It's like, is scale good? We talk about decentralized social media networks and sort of like these decentralized things being built out. And we sort of bemoan the fact that like people aren't flocking to them. People aren't leaving these centralized platforms. But on the flip side of this, like, it is impossible to moderate content on Facebook. Like, there are 3.4 billion people between Facebook, WhatsApp, Instagram, and there's just no way to humanly do that. And so if we're kind of bemoaning the small scale of some of these crypto or projects or more decentralized projects, that might not actually be a bad thing. Like, is it a good thing if there's a platform that can, be used to organize people on such a huge level, but also push disinformation and other things, be used as a tool by foreign governments, as was the case in Russia in the 2016 elections? And I just think like maybe we don't need a bigger, more scalable internet. Maybe we need more segmented and siloed like tools that people can come to as they use. And so kind of flipping the idea of like what this decision is about on its head a bit, I think it maybe makes the case for me for there to be a smaller, more personalized, maybe more peer-to-peer internet rather than these like huge monolithic like platforms that really do attract the over half of the world's population. But Jen, I saw you had your hand up previously.
Well, I mean, I just want to respond to what you were saying. Is it possible to go backwards, though? I mean, we've already reached this point in our lives where we have Facebook kind of controlling our communications online. Is it possible to get to an internet where we can segment and pull back and have these like siloed communities? It feels like we're talking about this ideal situation that it feels very hard to get to. I know Naomi's going to have something to say about that.
Yeah, Naomi, you take it and then I'll jump in.
Yeah, so I mean, all Trump needed to do when he was kicked off these platforms was say, hey, everyone, I'm going over to X platform. And he would have made the platform and 50% of the country would have flocked over there. So no, it's not hard to fragment this system. The fact that we're holding up Facebook and we're demanding access to it and saying, you need to put us on your platform, or Twitter, you need to put us on your platform. Like, we're elevating these companies to a position where they don't need to be elevated. Trump could absolutely have like single-handedly made whatever platform he decided to go to, but instead he decided to like whinge and moan and say, well, I shouldn't be kicked off. And if he went over to Gab, they would have blown through the roof. You know, if he went over to Parler, it wouldn't have mattered. The US kicked them off and a bunch of people, you know, muted them. People would have found a way to go over there. So the fact that he didn't, I mean, is crazy to me. Like, it just seems like an obvious way to fragment this system just by a person voluntarily choosing to go over to a different place.
I think that gets at a really core issue. And Will, I'm going to throw it to you to take us into the next story briefly. But I just want to say, like, I think that gets to a core issue we've talked about before, about whether this is about free speech or clout chasing. Because if you wanted free speech, you could go to these platforms that would allow that by design.
Definitely
But
clout
I think
chasing.
it's really about clout chasing. So that's something we also need to keep in mind. But Will, take us to the next segment.
Yeah, no more cloud chasing here. We're talking about the future of finance. Okay. So MasterCard has put out a new survey of 15,000 people across 18 countries, and 40% said they plan on using crypto in the next year. Millennials were the highest of that group, with 67% saying they're open to using the technology. 77% were interested in learning more, and 75% said they would use crypto if they understood it better, which of course is kind of the ever-present question in crypto. How does this work? So interesting to see MasterCard develop the survey, which was conducted in February and March. Also interesting to see that these giant card carriers are also working in the ecosystem and have been for some years. Visa, of course, has sponsored a lot of Lightning Network development, along with some other projects in stablecoin land. And MasterCard, of course, as CoinDesk broke the news, has been working in this space as well on some stablecoin developments. So I want to toss this right over to Zach, get your take on it. What do you think about MasterCard putting out the survey? And then what does the landscape look like for these giant card carriers moving into crypto?
Yeah, good question. I mean, initially I had a hard time sort of wrapping my head around how significant or insignificant some of this data was. But I think, like, just given that they spoke with so many people and that the data, like the fines seem somewhat maybe meatier than your standard survey fare. So that was like, I was interested to see those numbers come in a bit larger, honestly, than I was expecting in terms of awareness and willingness to try out these things. Yeah, the credit card companies are becoming increasingly notable players in the crypto space. I think they're seeing, you know, crypto can run across their payment rails, and they're willing to extend those services to anyone who's wanting to, you know, buy in USDC as opposed to buying in, you know, dollars per se. So the fact that these companies are putting out this research and committing resources to, you know, find ways for folks to use crypto on the existing credit card networks, super interesting. Yeah, super interesting. I'm going to be watching closely MasterCard and Visa, I think, in the coming months.
Yeah, I'll jump in there really quickly and just note that yesterday we're talking about Charlie Munger and his quotes on Bitcoin and the future of cryptocurrency. And then today we're talking about this huge survey of millennials who are interested in crypto. And it's interesting to know that there's like this very generational change there. And, it, you know, regardless of which way the tides turn on technology front, the fact that millennials are increasingly viewing this as a popular option or something they're interested in, that just is going to change the whole dynamic. It doesn't matter what someone's opinion or who's right or wrong. If it is technologically innovative, people are interested in it, and that's where they're going to put their money. So that's my follow-up from yesterday. I think that kind of closes the case on his comments, in my opinion.
Ben, your sassy mm-hms in the show are one of my favorite things to experience.
I am the bright ray of light here that we all need. That's me.
I was really surprised by how high these numbers were, and it just made me think about this ongoing conversation we're having about Doge. Like, maybe Doge is what's, getting these younger people interested in crypto, and they realize they need to learn more about it. And now they're speaking about it, and it's this gateway drug to maybe more stable, sustainable. Ben, stop. Sustainable ways of managing their money. But Ben, take it away.
No, I thought the numbers here were really interesting, right? Like usually when we get some of these surveys, it's a few thousand people or something like this. This was over 15,000 people. And that is not a like small amount for a sample size on this. And so I was really struck, particularly too, Will, off the back of the Munger comments yesterday, where it's just like, it doesn't matter, right? Like people are interested in this. They're like interested in adopting it potentially. And we're seeing these numbers seemingly start to go up in greater and greater degrees. I too was surprised at just how positive it was, particularly among millennials. But I also think like it points to larger issues like in the world economy. Like the US Census has come out recently and they've been finding, like that population is declining in the US. Like people are worried about economic insecurity in terms of having kids. And you're seeing this reflected across like a lot of rich companies or a lot of rich countries. And so I think that, there's naturally an interest to find a way towards further economic security, or at least a goddamn alternative, like because there are none out there almost. And I think that's where maybe a lot of draws of like crypto come from. It is something different. It is something novel. It is something that is not inherently controlled by like the powers that be. And that is really appealing, regardless of what Munger says. And I think this MasterCard kind of survey maybe points to, but Naomi, I'll toss down to you.
Yeah, I'll wrap up here, but that's a great point you raised, Jen, about Dogecoin. You may be onto something there. And I will say another figure that I thought was interesting. 25% of Australians apparently are actively trading cryptocurrency. Like what? And the best data point as we wrap up, I asked my 96-year-old grandmother on the weekend what she thinks is going to happen in crypto. And she thinks that Bitcoin isn't going anywhere and it's here to stay. So you heard it here first, guys, on the hash. There is your market forecast from Nan.
All right, go Nan. Thanks, Naomi. Thanks, Nan. Shout out to Nan. Hope you're doing well. Let's change gears. Let's go to venture fund season. Today, we reported the news that Multicoin Capital raised its second venture fund for $100 million. So they go to institutional investors, other limited partners. They get big checks and they invest in crypto startups across the ecosystem. That's how it works here. This obviously comes on the heels of a report in the Financial Times, I think it was last week, about A16Z. Andreessen Horowitz reportedly collecting checks for a $1 billion crypto venture fund, according to sources that the FT spoke with. So notably, this happens, in the wake of Coinbase's public listing. There seems to be an appetite to maybe invest in the next Coinbase among LPs who either previously were invested in such projects or are looking to get involved for the first time. That's what these big numbers say to me. I'm going to throw this to Will. What does this mean for crypto startups in the space? Seems like it might be a good time to pursue funding. There seems to be like a couple of big fund announcements that have been made recently suggesting that the appetite for backing some of these early stage projects is still out there.
Yeah, great point. So there's a few things that go on here in my mind's eye. I think a lot of people have money, they have dry powder, they can go in and invest in these startups. On the flip side, as a startup, you might not get the best VCs when it comes to bull markets because everybody wants to take a part of your tech. And so I think often we see like the higher class tech products out there, the higher class startups with really innovative ideas are actually holding back and they're not taking cash right now because they don't want their tech to be muddled with by VCs coming in and trying to like grab as part of the equity. So that's an interesting kind of anecdote here you maybe wouldn't think of in the first part. I've just kind of seen that around from some startups. On the flip side, it is interesting to note that the A16Zs of the world and the Multicoins of the world did very well over the last decade. Multicoin, I think at the beginning of the year, people were a little down on it, and then come a calendar year later, and their investments have just done so well. Notably, Solana was a huge bet that they put a lot of cash on, which of course is like an Ethereum alternative that FTX, one of the largest newer exchanges on the market, has a lot of money in as well. And Solana has just done so well, like much higher valuations than anyone would have seen. And Multicoin, of course, has a huge stake in that. So they're just getting fresh powder. I'd be interested to see what these valuations and money these firms have walked away from the table with compared to other Silicon Valley VCs and what they have made over last 10 to 5 years, kind of breaking down by categories. That would be interesting to me. But yeah, just to kind of finalize your question there, I think it kind of depends on which startup is looking for money and which one isn't. And the higher class ones often are pretty content with just working on their tech.
Yeah, Solana a big one, and Helium also a big one in the multi-coin portfolio this year. Ben, I saw your hand shoot up. What were you going to say?
Yeah, I was going to talk about that Helium investment because I think that's an important part of this story for the next round of kind of funding that might happen is, Multicoin made a big bet on them. They're kind of a blockchain IoT company that's working on developing further networks around that. And what I'm really curious about is we are seeing all these sort of crypto native like financial and custodial firms be snapped up by some of these big players. So what is that next round of innovation in the blockchain kind of startup space going to be? Is it going to be more financial products? Is it going to be maybe, trying to deliver further on some of the additional promises of decentralization that we talk about so much on this show, but, aren't the ones necessarily getting acquired for like tens of millions of dollars or whatever? And so if there's more money for people to take a risk and like do something that is, maybe not being done or envisioning something in a new use case, that's what I'm really excited about, because I think that makes the whole like case for crypto much stronger when it's not just kind of siloed in one developmental area. And Helium was an example of that, in particular the Multicoin saying, hey, we're looking for like things people aren't thinking about in the current kind of stream of thought. That leads me to think that there could be some cool stuff down the line.
Yeah, it kind of goes back to what we were talking about with Facebook and sort of this promise of a new internet, right? I think this idea of like user-owned networks is gaining a lot of steam, and the like token funded, like token projects basically represent ways for people who participate in these networks to own and control the fate of these networks. That to me is a compelling alternative to what we see with like Facebook and Twitter and Google. So I think Helium sort of speaks to that, right? Like these are people who run little nodes, and they can route like internet traffic from like a local e-scooter through their node and be paid to carry that bandwidth through the ether as it was. I'm going to throw this down to Naomi. I mean, so as all these venture funds are raising again, what Will called that dry powder. Where are you seeing this funding potentially go? Like what are you seeing might get funded here now that all these big VCs have a bunch of money to spend?
For sure. I mean, just to carry on Ben's point there. So the managing partner of Multicoin, he said, he's seeking out weird and different projects. And so that's cool. I really like that, because you have so much money in traditional finance that goes to whatever the sure thing is. And right now you're seeing a lot of people put things like Bitcoin on their balance sheet because it's the sure thing. It's been proven. It's just so exciting that we're in this world where there is a lot of money flowing around, and it is seeking out, unconventional things, because that's how we really spur innovation forward. And so the fact that people are making big bets on these unknown projects or things that are a little bit different or weird, or, I think that's really interesting and exactly what we need in finance, where we have had just the same thing for so long. And then Bitcoin comes along and changes everything. And now we're just seeing innovation all over the place, and funds like this that are willing to support people who are building in those areas. So super cool. And I'm excited to see what happens there.
Sounds good. We will see what happens, and we'll probably talk about it at a future date. But for now, that is today's episode of The Hash. Thanks for joining us. Naomi, Ben, Jen, Will, it's been a pleasure. I'm Zack Seward. We'll be back here again tomorrow to talk more about the latest in crypto news. Thanks so much, and stick with us on CoinDesk TV at 3 p.m. Eastern for All About Bitcoin. We'll see you soon. Cool.
Bye.